Hi, dreamers. So today I'm going to do something rare. Tell you about a stock that I've been watching closely and pulled the trigger on this week so that you will know what I'm taking a position on more real time. I just bought a bunch of it, and this is a brand new stock to my portfolio. So exciting. Okay, guys, you ready? Here we go. So, one of the things I like to do is just be aware of when the market has unrealistic fear. There's definitely opportunity and diamonds buried in that. And all of the media headlines about the banking crisis and banks collapsing have people on edge. And we've seen First Republic Bank, Signature Bank, and Silicon Valley Bank recently go under. And then you see headlines like this in the Wall Street Journal and other places. Fear grips the market after 3 banks collapse in a week. Yikes. So this is when I like to take a closer look and see if there's any babies that have been thrown out with the bathwater. And I definitely think I've found one. The one I've been looking at is Truist Financial Corp, ticker symbol TFC. And you can see if you click on the chart here of 10 years that the bank has had a nice history of appreciation, collapsed during COVID, of course, and then recovered nicely until recently when we've had this giant dip in share price from a high of about $69 all the way down to 26. And so I wanted to show you some highlights from a recent Seeking Alpha article that I think nicely lay out the opportunity. So Truist is based in North Carolina. And did you know that behind JP Morgan, Bank of America, Citigroup, Wells Fargo, and US Bank, that they are the very next largest bank, ahead of PNC and Capital One? In fact, they've grown through mergers to become, sure, a regional bank, but a fairly large one, with about $574 billion in assets. To me, that looks too big to fail. And so another thing I wanted to point out in this article, and the thing that I'm concerned about, is what kind of loans are there in the commercial real estate area on the balance sheet of any given regional bank, because that's a particular pain point that could be very damaging in the short term. And so that's one thing that is addressed here in this article, that Truist has become more cautious in its outlook regarding commercial real estate in particular, and has tightened credit and reduced risk in this particular area. But let's look at some of the information. So here's a snippet that essentially shows how TFC compares to their peers in terms of CRE, or commercial real estate, growth. And you can see that they're the lowest among their peers. One of the things, if you actually look into the CRE mix, is just what percentage is office space, which is the one that is most concerning to me. And I like a couple of things. One is the percentage of office space is only at 18% inside of a mix, so that's nice diversification, in addition to about 60% Class A loans within that. So those are two things I'm liking as I take a look at how their loans are structured and set up today. So as you know, the next thing I would do is actually just take a look at the numbers myself. And right away I notice a couple of things. One, there's a rating of a buy for Seeking Alpha analysts and for Wall Street. And take a look at this dividend yield, 7.46, with a payout ratio of 42%, a 5-year CAGR of 8.79, and dividend growth of 8 years. So let's take a look at this dividend history. It's got a rating of a B+, with 8 years of consecutive dividend growth, and a rating of an A with 25 years of consecutive dividend payments. And so if I show how that looks in the last 10 years, you can see a steady, nice increase, in addition to potentially a special payout. So I'm liking the looks of this already. I also wanted to point out another thing in Fidelity, which is if you click on this Dividends and Earnings tab, there you see that 7.46, but you also see the PE ratios over here. And this is a nice little tool right here too, model the stock price using PE. And if you click on that, you can see that TFC's PE is at a 5-year low at 6.21. Wow, that is tremendous. And so if I put all of this in my evaluation spreadsheet, like I did when I bought a few days ago, the yield was actually at 7.75 at that point. The beta is at 1.1 for TFC. They've had 8 years of consecutive dividend increases and 25 years of consecutive dividend payouts. That ratio of payout is a very low 42%, with a nice 8.8% 5-year CAGR and a staggering 5.98 PE ratio when I bought it. And as you saw just now, it's already gone up to above 6. And so there you have it, my friends, right there in my Fidelity account. TFC is a new position. It's now at 27.8, and I've got about $12,000 in that, which for me is less than 1% of my entire portfolio. So this is a great example of a calculated risk that I'm taking that increases my PATI, gives me a better yield. And how did I raise the capital for that? Well, you're not going to believe this, but I actually sold some of my beloved BCE just in this one area, in this one account. So that's what I rolled into in order to try to capture this opportunity. Now, what are the downsides? What are some of the risks to this? Well, I mean, there's a potential that the US government puts some regulations on these banks, maybe even around the dividend, just to secure their books. But that could be something that's applied pointedly to banks that have a high level of commercial risk on their books. And it's possible that that kind of regulation won't ever come to pass. And these are just some of the risks of investing in any environment at any level. And so with less than 1% of my portfolio, it's a risk I'm going to take and pretty excited about. Well, that's it for today. If you're interested in a premium Seeking Alpha subscription to do additional research, feel free to click on the link in the description. As you know, I'm an affiliate. And don't forget to also follow me on Instagram and Twitter if you'd like more of a real-time daily interaction. Okay, as always, I encourage you to do your own research, then implement and learn by putting it into practice. And as a reminder, I am not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.